All right. Hello, folks. How's everybody doing? All right. Cool. Thank you very much. Good afternoon. We are very pleased to be joining you today. And Evan, thank you very much for warming up the crowd and also providing a great foundation from which our conversation will build. And I don't know, you know what, I'm just going to speak for myself here and say that for the many years that I've worked on broadband access, financing has not always been at the top of the list in the discussions. When we're talking about closing the digital divide, much of the conversation has revolved around grants. And in the last few years in particular, that's because there has been an influx in federal funding. That influx of federal funding is getting ready to end, or we're on the tail end of that. So as we look ahead and we think about this infrastructure through the lens of sustainability, through the lens of community infrastructure, how do we need to reframe our mindset about about how it comes to paying for these networks and sustaining them in the long run? So this is where this panel started. So if you guys don't mind briefly introducing yourselves and importantly, who you represent and the role that you play in the broadband session.
Yeah, okay. Good afternoon. My name is Prather. I'm the CEO of Totelcom Communications. We are a rural ISP. We serve an area about 2 hours southwest of Dallas, so we're out in the middle of Texas. We mostly use fiber. We do use some fixed wireless and other technologies. We have been in business for over 60 years. That's what we do. We live where we serve. And we're really trying to connect all the consumers that we can. I'm also a CPA, and so when I look at my job, I like to look at the number side of things. That's the way I approach it. And so when we're looking at new projects, my number one goal is to protect our existing customers and our core business model. And so when we're looking at projects, the math to me is just as important as the engineering.
You can just keep going. Can you guys hear me okay? Is this on? All right. Yeah, I mean, we're 100 hook with CoBank, and numbers are also important to me as a funder. We'll talk about this. How about now? I mean, I can do it without the mic. It's harder. I won't be able to talk for the rest of that. So I'll recap what I just said, which is I'm 100 hook with CoBank, and I also care about numbers. Obviously, we're working for a bank. CoBank is a member of the Farm Credit System, which was established in the early 1900s to serve farmers and ranchers focused on rural America. If you guys live in rural America, you probably run into the Farm Credit System. We're a member of that overarching system. We're the only member of the Farm Credit System that also has the ability to work directly with infrastructure companies. And so CoBank in our various areas serves power and water and also digital infrastructure. So here I am today to talk about serving rural America and dealing with broadband and digital life.
Thank you. I also realized as you were both introducing yourselves that I didn't introduce myself. My name is Kathryn DeWitt. Sorry, I'm the project director for the Broadband Access Initiative at the Pew Charitable Trusts. If you don't know Pew, we are a fact-based, nonpartisan research organization that brings data and numbers into policymaking. So, all big fans of numbers up here.
Yeah, so if you don't like numbers, maybe a coffee break.
Yeah, just take a break now. Take it easy. Okay, so let's set the scene. If I am an ISP and you are my banker, how do we find one another? And what does that first real conversation about a project actually look like?
I think that's the question that bankers have been asking themselves for ever since banking started in the 1600s. Like, how do I find customers? I mean, it's a tricky answer, right? I mean, showing up to places like this is a great place to meet a banker. Another place to meet a banker is at your local bank. And it kind of depends on the project that you're working on and what your needs are. But I think, I can't remember which I think was the first question that we talked about this morning, which is community engagement and keeping community involved. I mean, that's how you meet your banker, right? As you're all involved in your community, you get to know your banker. Maybe they're not a specialist in broadband like I am, but they're certainly a specialist in your community. And so, there's lots of different ways to solve the funding problem, and I'm certainly one of them. But being involved with your community is a great place to start.
And from our perspective, one thing, just to be full disclosure, Hunter and I do work together. CoBank does work with Totelcom. And one thing that I really appreciate about them and our local banks too is that they understand what we're doing. They understand who we're serving. it's more of a we're all in this together, and I think that's where the community partnership of it comes to. Your question about how we work with the communities too in that relationship is that's where we can get a lot of the information we're looking for. We're going to talk a lot about what we want to see in a financing deal. A lot of that is some demographic information, some other information about what's in the community, and that's where those partners come into.
And so that's where in the conversation you would hope that local government, local philanthropy may show up as well as part of that both needs identification and then figuring out what are the pieces and the numbers that we need to bring to the table. Okay. All right, Hunter, let us start with some basics. What are the primary differences between a grant and a loan? And how do you evaluate whether a specific area or an entire project should be financed primarily with loans, primarily with grants, or some mix of the two?
Okay, the first part is really, really easy. It gets more complicated after that. Grants don't charge interest, so great place to start.
Very simple.
Yeah, super simple. And we're done here, right?
I think so.
I think that as you get into the second part of that question, which is, how do you blend grants with loans? A lot of it is the community that you're serving, the subscribers that you're going to be serving, what you can charge them, what the community can bear to pay, and kind of the economics of the project you have to look at. I think that's what it really comes down to. And grants do a really, really nice job of helping you serve areas that you wouldn't be able to necessarily serve with a traditional bank loan, because we're going to talk about this later. I don't want to steal I've got 15 minutes allocated to cost of capital. So again, coffee break now if you don't like numbers. But I think understanding what the project does and how it's going to impact your income statement and your balance sheet, along with your benefiting your community, is really, really important. And as you figure that out, it'll become very, very apparent what the role of grants is, what the role of bank debt is, what the role of equity, all those different kind of funding sources. It all kind of plays together, and every project has a different mix. Every company has a different need. So I don't think I answered your question, which was intentional.
No, I think you did. But you didn't say capital stack, which I was.
No, I'm saving that for that.
Oh, okay, all right, sorry. I didn't.
It's not ace in the hole.
I apologize. All right, so Jennifer, from your perspective, when you're looking at a project, what goes into your basic financing model, and what are the first three numbers that you want on a page?
So the first two things I'm going to look at are my cost per passing, and I'm going to talk about what levers are in those. So I'm going to look at cost per passing. I'm going to look at my total expected take rate and how long it takes to get there. And then I'm going to want to look at my average revenue per customer. And so when we talk about that total cost per passing, there's two real factors to that. One is how much does it cost to build? What kind of building are we going to do? Is it going to be underground or aerial? All of that. And then also, what is that density? Is it 3 houses per mile? Is it a group here and then a really sparse part in the middle and another kind of denser group over here? Those affect that number. When I'm looking at my expected take rate, really the biggest lever there is going to be your competition. What's there today? What do we think will be there tomorrow? That's what my banker is going to want to hear me talk about. That looks different today than it did even 5 years ago, because 5 years ago I had a lot of territory that honestly didn't even have cell coverage or any sort of 5G coverage. And today there's a Starlink box that can fit in all of that. So those numbers are starting to look really different. That's the biggest one there. And then I think pertinent to this group too, that average revenue per customer is going to be a big component of it. Because if I build it and if people get to it, how much are they going to pay me every month? And that's where, as a lot of our low income programs are going away. I know that people look to us to help provide an offset for those who can't afford it, but part of that number is going to affect if I think a project can even work or not. So how much of that demographic is going to be looking for that, and what am I going to be able to get for each of those customers that we pick up? Those are my three numbers.
Thank you, that's really helpful, and I appreciate you also clarifying that point about the lower income households and where those subsidies fit into that in the business plan. Hunter, during our prep call, you said that the rate of return has to clear the interest rate hurdle. What metrics or thresholds are you looking at to decide whether a project actually clears that hurdle?
This is when we flash the formula up here and showing that math. It's really, basic. Yeah, it really comes down to understanding the return that you can generate off the project. When you're looking at a grant-supported project, you don't necessarily have a cost of that. There's cost. It's just not an interest rate hurdle that you have to clear. When you're borrowing to do it, the return on that project, whatever it is, has to generate enough of a return to clear that interest rate hurdle. And that's not even counting the cost of equity, because depending on whether you're privately held or cooperative or whatever it is, there's, cost of that equity that should go in there. So if you're, let's say, starting at 9% on your cost of debt, that's where your return has to be, just to clear your debt hurdle and not even get into the equity piece. And so, looking at your projects, looking at the kind of revenue that can be generated off that project, and then doing the hard math of like, hey, I really want to do this, but can I do this? Does this make sense? And Jennifer's a lot better at doing the actual work than me. I just armchair quarterback. I'm like, oh, what are you doing now? So maybe you can probably add some more insight than that. But that's the way we look at it.
Yeah, Jennifer, actually, it would be great if you could build on that. Like, is there at any point where the hurdle just feels too high?
Oh yeah, for sure. I think, we always try to say the answer is not no. It's always going to be a maybe because there are things that can come along that change that. Right now, I have a lot of areas that I would love to serve, but to be honest, the hurdle is too high because money's too expensive. It's not going to pay it back. There's just not enough people there. But we never really say no. It's always, what else can we do? Can we use something else to get there now and have a more long-term plan? Some of the other things that can change that, though, that we're seeing today are what else is coming in. And that's where, again, like our local governments know, do we have data center projects trying to come in? That would greatly change maybe the numbers as far as looking at to get some of that really far-flung stuff. That's where those are going. If I can offset the cost to the consumers out there by picking up a potential data center, that could radically change the formula that you're looking at. Another thing is like cell phone towers. We build a lot of fiber to backhaul those. Same thing, you're gonna put some of those in, maybe you're stretching out to the less dense areas. So that's gonna help offset some of those. So it's really like an ongoing calculation in some of these spaces that are unserved today. You've also got some big, I think somebody mentioned just a little bit ago about some of the smart ag technologies. We have some big dairies that are doing some really cool stuff with their cows. If they now want to help offset the cost to get that big infrastructure, then that's going to affect a lot of other places along the way.
So we're hearing in some respects a tension between the perspective of being grants are impact focused, banks are obviously more focused on cash flow. I'm curious, Jennifer, you just gave a couple of points on where other partners may be able to bring different perspectives and information to sweeten the deal, if you will. Specifically for local governments, what role is local government playing in that conversation, and more to the point, what type of information can we bring forward that will help you make that decision?
Yeah, that's a good question, and I have an example from our own personal story, the Totelcom story of how we've done that. We actually had a federal grant program, a Reconnect 3 project, that we weren't talking to Hunter about that. It was fully a grant funded. It was a really good area for it. It's some sparse, difficult to build terrain. But again, there is some of that energy infrastructure, ag infrastructure far out there that it helped us get to. So a really big return if you can actually get the infrastructure out there. And we were getting ready to get started, and we ran into some pretty horrific permitting challenges. We ran into some electric co-op permitting challenges, and we really turned to the county. If you want to serve some of this infrastructure that you're trying to keep within the county, you got to help us. And so they not only could help facilitate some conversations and in a way that really put pressure in a way that I could not do on my own. If I don't have a lot of leverage, I'm really going to look to that county and even small town official to help me do that. They were very helpful there. And then really by the end of it, we probably will look to use our work with CoBank and maybe our line of credit to help bridge the gap between finishing a build and then getting those grant funds. Sometimes when they're reimbursable, that's still cash that has to come out of my pocket. And so just the timing aspect of it, you can end up working with your lender. But really those local officials can help with the facilitation of things sometimes.
That's incredibly helpful. Hunter, from your perspective, is there a rule of thumb for how much grant support a project may need before it starts to feel comfortable for you?
Yeah, it really depends on the project. And I think one thing it'd be probably helpful to step back a bit and just talk about the way we work and some financing maybe very project focused, and there's entire banking industries that are project finance driven. That's not the way we operate. We look at projects as a part of an overall picture, and it's really important to see how that individual project sits with everything else that the company is doing. And so sometimes on paper, a project may not necessarily make a ton of sense, but in talking with their leadership, we can see the bigger plan of why they're doing it. And so maybe it doesn't clear that return hole immediately, but over time, it's a more strategic way for the company. And so maybe that's an opportunity for us to work with them, even if the project at hand that we're financing isn't immediately going to generate that return. So I can't give you guys a number. I wish I could come up and be like, okay, you know what, meet me afterwards. I've got this brochure. It's going to tell you exactly what you need to do. It's never that simple. It's a complicated conversation. We really need to understand what's happening with the company, what's happening with the project, and understand, again, kind of what we were talking about earlier. What's the role of grant? What's the role of debt? How is it all going to play together? And then we make a decision based on that.
I think the way I think about grants is that they don't make broadband free, but they very much change the risk profile of what we're trying to do.
Thank you. You said it in about 3 seconds, but I took 45 seconds.
I learned it from you, so.
It's good. So Hunter, one more question on this point. When we're thinking about lines of credits, what are the typical terms and requirements? What do they look like? And what should an ISP be ready to show you before you send one?
Okay. You asked me one of those questions. You may have to push me off the stage, so I'll talk about lines of credit until I'm blue in the face. I'm really excited about lines of credit, which is probably why I ended up in banking. So there's a couple of different ways to use a line of credit. One is to finance your capital expenditures, so the actual investment itself, which is, it's basically a short-term financing model with a long-term payback where often you'll roll it into a longer-term facility, something like that. Then there's what Jennifer was talking about earlier, which is hey, we've got grants that are funding this project, but there's real cash flow impacts to funding these projects. Will you help us out and kind of help take some of the burden off of floating that cash? So use your revolver to kind of pay for the work that needs to be done, and then as reimbursements come in, you pay down your revolver, which is good because it lowers your interest expense and all that fun stuff, right? So those are the two ways that I look at revolvers. Both are going to require the same conversation with your banker, whether it's me or your local banker or someone else, right? It's, you're going to need to get an idea of the financial situation of the company, understand where your balance sheet's at, understand where your income statement is at, understand what the project is. Let's look into the future. What do you think this is going to do for your company? You roll all those things together, and you can get a pretty good picture of what the company is and what they want to be. And then at the end of the day, that's the conversation you're having with your banker, because they're investing in your organization. You're trying to basically share all your vision, the reasons why you think this is a good opportunity, why you're in the business, and trying to get them on board with you. They're going to have a much lower risk appetite than you, always, because at the end of the day, your banker only gets that rate, that interest rate back. There's no equity in it, so there's no return. So they are always going to be the most risk-averse person in the room, always. So share the vision, and then share the vision on why there's no risk to their capital. that's how you convince your banker to get on board.
Jennifer, sorry, I'm processing.
Sorry.
But no, it's great. No,
Okay,
it's a good thing. It's a good processing. But Jennifer, let's build on Hunter's point. Whether we're talking about risk or just how the business plan is coming together, these are long-term financial investments. So how do you protect your core business when you are also pursuing projects that are either higher risk or in underserved areas?
Yeah, that's a really good question, because at the end of the day, my core business essentially is serving some of these high-risk areas. We do it through a variety of mechanisms, and I will talk to anyone about a new mechanism and a way to do it. That is, we're always looking for new ways to get it done. It's really all about reality and preparation. So the reality is that we can't only have a business comprised of this really expensive, no return type situation. Hunter does not want to fund that at all. He wants to see that I have a long-term plan. But for us, part of that long-term plan is also keeping the doors open. We pay employees. We pride ourselves in being a really good employer in a rural area as well. We provide good benefits, good long-term jobs, people that stay for 20, 30, 40 years. And so part of that all goes into the projects that I'm going to choose and how I'm going to choose them and how I'm going to balance that. The way that it really works is that we have to balance how we build this. So as an example, what we do this year, we're building another town. And when I say town, we're talking 2,000 people. For me, that you saw on the screen earlier, that's beautiful. That's like a 4 or 5 year return. That's a good, we get that project done, it gets us some cash flow, you're good. I'm gonna offset that with the stuff that we have to do based on funding programs, but that is much harder to do. And then we're gonna do that, we may plan it 5 years in advance, but we're gonna go 1 year at a time to make sure that we're not overextending ourselves. Because the other thing about rule builds, and part of what you build in with your plan when you're talking to Hunter, it's not gonna go perfectly. There's no rule build that goes according to plan. There's always something. And so we really have to, you gotta look in the future, make sure you're planning for those long-term builds, and you gotta kind of spread out that risk of those really, really low density, really risky things. And then also know that you've gotta set aside for what may pop up, the things that are unexpected. Sometimes it's good stuff. Sometimes you get new grant programs that you didn't expect that you hope to play in. The offset of that is sometimes they cost $50,000 or more to apply for. So you just gotta be ready for all those things. But it is kind of a question of, okay, we did a couple years of really low density stuff. We gotta get something this year that's a little bit less risky.
Okay. So you're thinking about that combination at all times and staying flexible as new opportunities arise or as challenges come forward. But you're always planning ahead.
Yes.
Hunter, let's say that a loan finance project actually underperforms. Subscriber uptake, for example, is lower or the costs run higher. What options are on the table at that point?
And this is probably the main reason we don't underwrite projects, because projects underperform. I don't think I've ever worked with a company that had a 100% hit rate on projects that they work on. There's always surprises. And so you don't look at that one project on a standalone basis because if, for whatever reason, you don't hit your penetration rate, you have cost overruns. There's all kinds of things that can happen in the course of a build that go sideways. And as as a lender, the levers that we have to pull are not great. They're not fun for anybody. So we really like to avoid pulling those levers unless we absolutely have to. And so when we're looking at companies that we're working with, it really is that, like, okay, what happens if this goes sideways? What's a stress case? And then if it goes in that direction, how are we going to chart a path together to kind of navigate out of the choppy waters? And fortunately, I think we have a great success rate of working with really strong companies that have good visions, and like I said, they all run into choppy waters, but I think most of them have a good path to navigate it. And so it doesn't usually come to those levers, thankfully. So I don't even want to talk about them. I don't want to get anyone sad about the levers that banks have. Just know that make sure you've got lots and lots of capacity to deal with the blemishes and the challenges that you inevitably face.
So it sounds like really that's where going back to where we started, that relationship with your banker is really important. Just to be able to talk through all of those things at the outset and then work together when these things inevitably pop up.
For sure.
Okay, so within your respective industries, banking, telecommunications, organizations will differ on how quickly they want to see a return and how they plan for it. For ISPs with a national footprint and certain private lenders, that can be 5 years or less. What does that look like for both of you? And Hunter, I'll start with you, and then Jennifer, to you.
Yeah, I think one of the really nice things about working for CoBank is a cooperative. And so working for a cooperative, working for a member of the Farm Credit System, we're a mission-based institution. And so, that return that we're looking for isn't some of the aggressive times you might run into with other organizations. I think it really is a longer-term view of the relationship. And obviously we have ownership. Our ownership just happens to be our members or our borrowers. So, that tends to focus and align our goals. But we still have to earn a return. We have to protect our capital, and so we do have to get a return, which means we have to charge interest and all of that. Otherwise, we'd be just giving out grants, and that'd be a lot more popular at cocktail parties. So, I think I'm again not doing a great job of answering your question specifically. I don't think there is a number I can tell you, which is okay. This is when we need to see a return on it, because it just varies so much between customer to customer, situation to situation, and it's really nuanced. And I think that's one of the beautiful things, again, about being cooperative and being mission-based is that we have that ability to kind of see the nuance in it.
So from the perspective of perhaps a funder or a philanthropist or a local organizational leader in the room, this again reinforces know your lender and understand how they may be approaching that relationship and what may be driving some of the terms and conditions associated with it.
Yeah, I would say that anybody who's going to give you money, definitely get to know them and understand what their motivations are. I think that's a good life lesson right there.
Generally, yes.
Yeah.
Same question to you. Do you need me to repeat it? Or?
No. I'm still stuck on your, like, some have a 5-year return. That would be amazing. We could do a lot of broadband with a 5-year return. Sadly, I do not have a lot of that. I have areas that just frankly don't have a return, at least will past my retirement date. But again, that's not really what we are fully about, because while we do build projects and have to get the cash flow to keep building projects, it's also about sustaining it. I talked earlier about we see our customers in the grocery store, so we really have to not only build a network, but then continue to support it, support the consumers who are attached to it. And really it's all about just kind of a much longer term horizon in our entire business. I don't have quarterly earnings calls. I also don't have my name on a sports stadium, so there are things I don't have to worry about. But I do have to worry about keeping the doors open, keeping those employees employed, keeping our sponsorships for their kids' t-ball teams and stuff like that. So yes, it is very different when you're working with someone who is a true partner in the community with you.
Okay, so you may not be on a stadium, but you are in New Jersey.
We are on a t-ball t-shirt. You betcha. Yes.
Right. To this point about returns and to your point about returns, let's talk about BEAD. BEAD today looks very different from what many of us envisioned it would be about 5 years ago. How is that shaping how you're thinking about deployment today versus 5 years from now?
The truth is that for us, it really hasn't changed a ton. And I say that because a lot of the areas around me were maybe incorrectly shown as served already. Just some of the FCC's mapping, there was some bad data input, maybe some bad validation. And so there's a lot of areas that were not eligible that still do not have funding. Really the difference is that those consumers have waited 5 more years to still not have good broadband. And so while it feels like we're still in the same boat, we're well practiced at how do we do this. At this point, it feels like we can really move forward with other plans because we're not looking at how do we do those grant applications and how to, all that's past now. So we can really just focus on our core business and figuring out how to serve those hard to reach communities.
Okay, thank you. Andre, anything to add?
Yeah, not specifically. I think our role as a funder, we're a little bit offset from the BEAD changes, and obviously taking a kind of agnostic position on it. I think for us, some of the else letter of credit, performance bonds, some of those kinds of changes, we've had to react to those, but nothing specific for this audience.
Okay, that's helpful. Jennifer, looking ahead, technologies like next-gen wireless, just multimodal builds are evolving. And for rural communities in particular, it seems like that is an area of focus. We think about applications, particularly in agriculture. So as an ISP, what are you considering both technically and financially to make a credible business case for that ultimately build?
That's a really good question and a really nuanced question too. So, no, it's good. It's a good one. So you have to catch me if I don't catch some of that. So we use everything. We use fiber, we use some fixed wireless. We look at terrain, we look at density, we look at speed to market. We have particularly used some wireless applications in areas where we just had to get speed to someone now because it would take so much longer to get that fiber build out to them. Now, with that being said, what we're really looking at again is that long-term solution. And any provider that you're working with should be able to give you that long-term answer for what it is they plan to do. And I'll tell you why that's important. If we're financing something in particular, that's a long-term, we talked about, that's a long-term payback. It's going to be a long-term deal. And so we need the technology that will support that long-term deal. We had a fixed wireless tower that just 2 weeks ago, we had to jump up and beef up our backhaul to it because the demand well outpaced what we had initially planned on. And so that's great that the demand was there, but we had to be ready to go ahead and beef that up. Now, when we do a wireless plan, we already have those plans ready and know about when we think we're gonna have to do it. We have to push that one up. Something may come along that requires us to go ahead and put fiber somewhere that we weren't quite ready to yet. All that should be in your provider's plans if you're working with them, especially at a community level. And so when we're looking at financing, it's not just about today, it's about tomorrow and 5 years from now, because it just takes too long to work back around to those communities. So you really do have to do it right the first time.
So you're talking less about the contingencies and more about variables. And like, as things may change, you've already thought through scenario A, B, C, and D, and you have a plan for that. You've walked through that plan with your community partners.
Yeah, and I think that is what makes you financially more sound whenever you have those plans in place and you know what to expect. You may not know the exact timing of some of those things, but you better be prepared for that or you're gonna be stuck with bad service, and we're kind of right back where we started.
Is there anything in that discussion that a community-based partner in particular should be asking or seeking to understand?
Yes, I think there's a number of things you can ask about that as a community partner. I think the number one thing is just, do you have a plan? And then means test it. See if you think it's credible, if it makes sense to you based on what you think about your community and how things are gonna happen. There's a lot of people you can just get a second opinion on. I think it's really important to do that.
Mm-hmm. And I do want to emphasize that it may seem a little silly to ask, do you have a plan? But that is an incredibly important question to ask because it is the means testing. You want to know that that partner has actually thought through these variables that can pop up because it shows whether or not they have the experience to build.
Or if they even plan to be there. If you ask a question and their plan is to exit in 5 years, then they're not going to be thinking past that. And maybe that's okay because maybe that gets you what you need today and you're okay with that, but just make sure that you know that that's what you're getting.
It's a really good point. Hunter, how about you? Are emerging technologies or a shift towards more multimodal builds, has that shifted how y'all are looking at projects and partnerships?
Not particularly. I think at the end of the day, we're working with an ISP or a broadband provider. The technologies that they use to serve their customers, that's important. And certainly, Jennifer can attest. It's something we talk about, and there's lots of reasons for that. But at the end of the day, I think it goes back to what we were talking about earlier, which is what's your plan and what are you trying to accomplish, and how can we partner with you, and then obviously how are you going to make the money to pay us back? So kind of that kind of conversation all and enclosed in a single, encompassing all of that in one conversation, which can sometimes be tricky. But I will say that it's been very exciting to see some of the advancements in fixed wireless, however you want to call it, over the last couple of years. I do think fiber is really fast. So
yeah, helps to have it there.
It does.
Yeah, it does. Yeah. Okay, we are going to open this up for questions in a few minutes, but we're going to do a quick lightning round. I know, fast.
Is there a buzzer or something we can hit?
I wasn't allowed to have one.
Oh.
I'm just kidding, I didn't ask.
Next year.
Next year, okay. Notes for the future. Okay, you both emphasized that we are talking about long-term, reliable, scalable internet, and that this is maybe a 50-year commitment to communities. How does that mission show up in your financing decisions? Remember, lightning round. Go.
I didn't get
Yeah.
It's all you. No. I think you guys have heard this for the entire time we've been up here talking. It's about understanding the company and the goals and the communities that they serve. And when you're working to build a relationship, relationships aren't transactional by definition. And so understanding what is going to happen over the next 3 years is certainly important, but understanding what the plan is for the next 50 is equally important.
As we look at those long-term decisions, it's really important for me to stay in good standing with my lender so that when opportunities do pop up, that I'm able to take advantage of them.
Perfect, thank you. If you could give one piece of advice to a community-oriented ISP that, quote, doesn't have the cash today, end quote, but wants to build in the next few years, what should they do in the next 6 months to be finance ready?
You go first.
Okay.
Oh, sorry.
No, it's okay. I was going to have a sarcastic response, so better.
We're both ready. I think, again, just clean financials, making sure that you've got, because they're going to ask you the questions. If you got something weird on there, they're going to ask you about it. So make sure you have an answer. Make sure that you have a credible plan for both your take rate and what you realistically expect to get in that revenue. Maybe that's where you already have worked with a partner to find, and we talked earlier about your training programs, your adoption programs, something that you can point to show that you have a plan to not just build it, but help it to thrive and whatnot. Just the more of that you can have pre-planned, the better off you'll be.
Yeah, now that you had a thoughtful answer, I feel really bad. I'm just saying save cash, but no, Jenna, nice answer.
Okay. All right, so save cash and think about other things that can demonstrate take up, things like that, marketing, adoption, training. Okay, last question. Same question, but for local leaders. What is one concrete thing that they can do to be a better partner to both the ISP and the banker?
Do you want me to go first?
Go for it.
So I think, and again, I get to look at all of this kind of from a perch afar. I think understanding everyone's needs to make the project happen, because at the end of the day, you're working for this goal, which is bringing high-speed internet to this community, right? And understanding the challenges that maybe Jennifer faces, and then reciprocally looking at the challenges the community faces, the city faces, and kind of understanding where everyone is coming from and being compassionate about that, because we all have things that we have to deal with, in our jobs, and understanding how we can work together to better serve the community at the end of the day is what we're all trying to do. So I think if everyone could just step back a little bit and just think about everyone's needs, I think we'd all be better off.
I really like the way you put that, because obviously I'm only focused on my needs, and so thank you for that kind of reframing.
Oh, me too.
But that is essentially, I think, the best thing you can do is help be that facilitator. If you want a real impact one of the things that we look to our local communities for is help with water utilities, because those are usually not mapped, one of the hardest ones for us to deal with. The more interfacing we can have from a community to say that they are requesting us to come build, the more it offsets maybe some of the friction that can exist between different utility providers. That's kind of a real impact one. We talked a lot today about permitting, anything you can do to make that go smoother and easier. Not that we absolutely want to weed out the bad actors as well. We don't want them in because they will cut my cable as much as they'll damage your things. But just helping make it a little bit smoother for those who are trying to be a good partner is helpful.
So it's not really about getting away with barn in that instance. Instead, it's thinking very pragmatically about what assets and help everybody can bring in, what those are financial or impact. Okay, cool. Any questions in the audience?
Oh, and then there's mics on the side.
Mike's on the side, in case you did not see that picture. Okay, cool.
Well, now I can't see you guys. I'm just really excited about this conversation. And I will say to you, Hunter, no, I am not a numbers woman. I'm a communications woman all day long. And so I thought about going and giving that cup of coffee that you mentioned earlier. But my name is Ebony Cooksey. I work for Nextlink Internet. And I am responsible for outreach and engaging with communities. So adoption is very important to me. One of the things that we're doing is setting up another digital empowerment center in Falls County, and it makes money sense because that is a county where we won the federal or the state Route 2 grant. So I did some data diving and found out what the problems were in that community, and that's what drove me to say, let's set up our digital empowerment center here. So what I want to hear from you, and I want to thank you, Jennifer, for reinforcing that communicating with local officials is how we get them to move the needle for us in spots where we can't get a response, because sometimes we smile and dial and we don't get anybody to call us back. But what I just want to hear from you are, what are some other creative ways that you have seen, your folks drive adoption? Particularly considering that the digital equity funding was canceled. Now I'm having to pull from sources that are so much smaller. We have a partnership with Microsoft, formerly Airband Initiative, but that digital navigator grant is so small, it's not sustainable. So the new hat that I might be wearing might be fundraising, might be finding a match for the digital navigator grant that we have. So I just would love to hear some insights, maybe some more creative ideas that you guys have seen or you've implemented at your ISP as well.
I think this one's you.
Okay.
Okay, sorry it was loaded.
No, that's a really good question. I'm always looking for more ideas. Some of the stuff that I feel like I've seen, you try not to be too self-serving with it, to be honest with you. I don't want people to ever think that we're just out promoting our own good, but I mean, we are too. That's part of it. I feel like a good space to work in is sometimes with our local schools. So whether that's doing some cybersecurity training that involves parents and how they help keep their kids safe. I do not want the responsibility for that because that is somewhat terrifying. But I think there's lots of places that you can help people learn how to get connected. For me, it's not that our company necessarily is going to be able to do that, but to make those connections and help bring those people into our community is what I think we can do. So whether it's teaching people how to do some telehealth initiatives, one thing I have mentioned, my mom does some of our training, and one thing she has been helping people with lately is even how to access your medical portal, because that's something that all your medical records have moved online, and people, if you don't know how to do that, you're definitely not going to do telehealth, but much less even just accessing that. Banking, we've seen some of our communities, their local banks have essentially gone away. You can only do online banking. If you don't know how to do that, you really need a trusted partner to help you learn how to do it. So I think helping connect all those different areas with someone you trust that helps you do it online.
I would add to that in other states and elsewhere, it has been very powerful for private sector partners to come in and validate a lot of these needs for elected officials, because you have, and this is one of those instances I think where both things can be true. This can be something that, folks advocating for digital opportunity can be pushing for, is just we need folks to be trained, and adoption is a good thing, and also have ISPs at the table saying, we also need this for our business, particularly in areas where the ROI is just not high. We just spent an hour talking about risk. So that's where both things can be true, and those partnerships can be really powerful when they're coming in together and layering on those use cases from places like healthcare, from places like education, to say this is where that investment is going to pay out and where it is going to have a very tangible impact on the community.
I have a question about grants. So you all compared loans and grants, and something that Jennifer said has been really eye-opening to me in this process is it can cost a lot of money to apply for a government grant, but there are also private philanthropic grants. So can you all, just from your various lenses, talk about government versus private grants, and then what, if anything, is the ongoing role of philanthropy in this space as you all talk about financing?
I'll jump in real quick. Okay. So it can be really expensive to apply for grants in general. And part of that is because of what I just told you is really important to have. You want to have really good plans, you want to have really solid engineering, but it does take money to build all of that. So it is kind of a give and take there. If you're a philanthropic grant, you can probably make that a little bit easier. There's just a lot of work involved in them. As far as the ongoing philanthropic way to help with that, I think we're going to come back again and again to that adoption part, just because a lot of the digital equity funding did go away. There's also a really big need that we see in our areas for low income assistance. Again, I told you part of what I'm looking at, if I'm building something, I have to count on a certain amount of revenue coming back from it to help either pay back my loan or to continue funding further expansion, reaching more people who don't have access. But if a vast majority of those can't afford what I'm trying to do, then the math just doesn't work. And so those are two places that I think philanthropic arms can really make a big impact.
Yeah, I just mirror those comments. We don't have a ton of experience with philanthropic grants, and most of the grants that I see have been federal and state grants. But I go back to what I said initially when I was asked about the difference between loans and grants. I said that the grants don't have interest. I didn't say that they didn't have costs associated with them. And there are certainly costs, and obviously every grant has different costs, but they tend to be, I think, Jennifer, you can probably talk about this more than me, but it seems to be that the process of applying for a grant often is more time consuming than it is from working with us, and that's one of the benefits of getting private funding is we're expensive comparatively, but the upfront time effort is less, and so you have to balance those different factors as you're trying to figure out your funding source.
It is, and it's the speculative nature of it, because with the grant, especially a really competitive grant like most of what we've seen, there's no guarantee I'm gonna get anything from that. If I'm working with a lender and I'm having to still do a lot of this, it's pretty, if we get to that point, it's pretty certain I'm going to get the funding for it. So that's one of the big differences too, I think.
I think being a partner and clarifying and elevating why it is expensive to apply for some of these grants. One of the things that we found in our research was that many ISPs preferred state programs to federal programs because the barriers to entry were just that much lower. But I think from the perspective of philanthropy, first, I think it's recognizing that you do have a role in this space. I often talk to funders who are like, I don't do bricks and mortar, broadband's not for me, and it's like, whoa, let's stop and pause. So it's understanding where philanthropy can play a role. Sometimes it may look like talking to folks about bills, but a lot of it will likely be in that adoption and digital opportunity space. And I think one of the losses of the Digital Equity Act is not just that enormous amount of funding and what it could do for communities, but it's the potential loss of the thinking that all of those digital opportunity offices put into institutionalizing these practices across government. So it stops being just one office of digital opportunity who is focusing on signing folks up for internet and making sure they know how to use their online portals. They would be working directly with their health and human services, with departments of education, to really embed these ideas of digital learning, digital training in their service delivery. And I think that that's a place where maybe philanthropy can step in to help think about how communities and states can help, again, embed those ideas across other areas of policy, because that's really how we reach that goal of sustainability and move away from one-time funding.
I have perhaps I can get a reflection from perhaps somebody at the Federal Reserve or at the panelists as well. But when I first met Kathryn, and one of the things that I was working on was financing broadband and the digital inclusion programs in financing and grant making that happens under the Community Reinvestment Act, right? So I had been a banker for many years, and doing community development banking and setting up those capital stacks for affordable housing, supporting small business loan funds and so forth, and doing new market tax credit deals, one of our great tools in community development finance. And then when I came to the Fed after community development banking, we saw this as an opportunity, right, to build broadband into the CRA because it was perfect, right? You need a combination in the capital stack of federal grants or other grants from banks, and then the financing piece as well, and making creative capital stacks that work to build assets in the community. And we got some great momentum. We had some fantastic, amazing new market tax credit deals, building fiber optic networks in Ohio and other places. Certainly in Texas, FAR got a grant from PNC Bank, which was then BBVA Compass, just to do its plan, right, for its network, which became its municipal fiber network. So we made a lot of progress, and then most recently, as part of the nonprofit Connect Humanity and the RGB Broadband Coalition, worked nationally, right, with the banking regulators to update the CRA and modernize. That was, since then, has been put on hold. It was just great progress when they passed it. It was amazing because they made broadband part of the definition of community development. And that was real important because it made it, unequivocally, part of the CRA, even though it had already been put into the CRA back in 2016. I'm just wondering, anybody from the Federal Reserve could perhaps say, I think Ksenia just left, but give us an update, because there has been a lot of changes just in the last year. We had seen a lot of progress, and then things were halted. I don't know if anybody has seen any work in their community. I haven't been working on that end lately, but we did modernize the CRA, but then that was put on hold, and then the CDFI fund has been under review, and it's so important because it's a combination of banks investing in CDFIs, community development financial institutions, so either directly lending and making grants, or through CDFIs in this awesome partnership that you can add to the capital stack that makes financing available for low and moderate income communities, all the way from for public safety needs to connecting people for all the reasons we've talked about today. So has anybody seen any advancements in that, or whether we're still on hold in the CRA, the Community Reinvestment Act?
Yeah, I unfortunately don't have an update for you. Obviously you listed a couple of very impactful programs. I've personally seen the good works that New Market Tax Credits have done, and CRA is a longstanding, benefit to communities. So unfortunately, that's not my day-to-day role, so I don't have anything for you. I apologize.
Hopefully we can ask this question whenever we have, at the regulators at least, ask this question so we can get some updates on, what are we expecting? Because it is such an important opportunity.
I just want to say, this is a phenomenal conversation. I think it's.
Can you put the microphone please? There we go. Thank you.
Is this better?
Yes.
Sorry.
Thank you.
Rare, I'm too tall. This has been a phenomenal conversation. I think it's rare to get a foundational financing question, sort of panel about broadband. My question is for the local government audience here in the room. What are the top things that you think a local government can do to attract new broadband investments in their localities? And then the second part is, what are the things that you see them doing that don't help along the way, that don't matter to you? For example, if somebody says, look, I did a financial feasibility study that says, Jennifer, you can build here and make a lot of money. Does that mean anything to you? What are the best practices and the less helpful practices that you suggest for local government?
Okay, I'm gonna be honest. The best things you can do are, number one, clear any permitting hurdles. That means with my county commissioners, can I build on your county roads? You're gonna give me a hard time about how we do it. We do it the best we can. We go out with you beforehand. We'll do whatever, but give me good expectations up front and then stick to them. So whatever you can do to clear any hurdles, and then also support me. If the county commissioners and or the city mayor or the city council or whomever, if they're with their words supporting us, that's gonna make it better for us to be there. If they just want to hand me a feasibility study, if I don't know where you got it or who did it, that's not going to do a lot for me. For most of the places that I'm building, we already have a pretty good idea of what's there, and we also know how to find that and scrub that and find out what's true and what's not. There's a lot of snake oil salesmen that will sell you a feasibility study. Don't buy those. You're really much better off. My personal opinion, this is my opinion, you are better off finding a partner that you want to work with and then helping them get those data points for the feasibility study. You will save a lot of money and you'll get a much better product.
Yeah, please don't buy those feasibility studies. Please don't. They look really nice, but that's not all they are. I'm not sure they're seeing a spreadsheet that you put together with your lived experiences than a really fancy feasibility study.
Anything on the first half of Danny's question about, so what not to do, but anything else to do? Stand in partnership. Anything to add, Hunter?
This is another one of those areas where because I'm a little bit set back from the kind of day-to-day experiences that Jennifer has, I don't have any real insight for it. I do see when communities and providers are working together and trying to solve problems. I'm kind of hitting this hard, but it's true. When you're truly working together to solve the problems that the community faces, everything goes smoother. So just work collaboratively with your service providers.
The other thing I would talk about is most of at least in Texas and where I'm at, our local governments also control your city library and some places like that. Give them the funding to advance some of this. Give them the directive that it's important to make sure that your community is digitally literate.
It's great. that offering that technical expertise as well for stuff they probably maybe hadn't thought to think of. Evan, and I'm sure we're bumping up on time as well, so I'm sorry. I apologize, sorry, I didn't see you on the left.
Yeah, just a quick question to Jennifer. I'm a county commissioner in a rural county, and based on your comments about assessing whether in fact this particular geographical area is somewhere that you think as a company that you can benefit from and also provide coverage, when you have a situation where there are competitors that are also kind of covering a similar area, what are the factors that go into your decision as it relates to who is already there, what service you can provide, what service they're providing, etc.? How do you evaluate that? And the reason I'm asking is because in my role as county commissioner, we are promoting involvement of ISPs within our county to get the coverage we need. And of course, we don't want to mess it up by having either too much competition or not enough. So what's your take on that?
That's a really good question, and I like that you brought it up because competition is a fun one to talk about, right? For me, I want no competition, but for you want competition in your county. You want enough to provide really good service and keep prices low. So I think that's a really good question. What I'm going to look at is what kind of technology is there versus what I'm looking to do. Another thing I'm going to look at is how recent is some of that, and that can be important in two ways. One, if it's recent and they're not doing much with it, then maybe I have more of an opportunity. Also, if it's recent, they may have cleared up some of those permitting and right-of-way challenges for me, or am I going to come in first and clear up that for someone else to come in after that? It's the truth, though. That's the kind of stuff that we look at.
So let me ask you, so in our role, should we just encourage ISPs to come in, do their own evaluation, and decide or not decide from that point of view? Is that fair?
Can I say this? Yes, and I think you should also try to weed out the bad actors. If there are people that you think are not going to take care of your consumers, try to be mean to them. Be nice to me, be mean to the ones that you think. That is the truth. Because you are going to get some people who come in and you're not doing what we want. Right. And so I think, there are levers that you can also pull that are totally fair, but you know who you're dealing with.
Great, thank you.
I would also say, get it on the record. But also, as I'm sitting here looking at the staff from the Broadband Development Office, I would think too that this is where reaching out to the BDO is helpful, just to get a take on what the providers are saying, maybe some additional support as y'all think about that, that build out strategy. But to the point on weeding out bad actors, or again, asking the right questions, you've got a great resource in the BDO as well. Sorry, I'm still laughing about that.
Thanks, Kathryn. My question is about how you build relationships with lenders. And so something that we talk about a lot with rural funders is, how do you approach new relationships with funders? But if debt financing is an option for you, and there may not be banks in your region with the capacity to make a loan for a project, how do you go out and find a bank to work with or a different lender that could have a financial product that could help your project? I think back to when some of the initial guidance to BEAD was coming out a few years ago, the whole question of the letter of credit. Rural communities, if you are an ISP and you want to go after a BEAD sub-grant, you need a letter of credit with a Weiss-rated bank, but those may not be in your area, and so now you have to go find them. What advice would you have, Jennifer, Hunter, Kathryn, about building a relationship with a lender that you may not know yet?
I mean, it would be really great if you guys could just put my contact information up here.
We will.
Give me a solid. I think the easy answer is start now. Start having conversations with banks that understand your needs and start early. Because relationships, just like in every part of your life, they don't happen overnight, and it takes time to build the trust that is inherent in any real relationship. And so take the time to invest in your financial partners well before you actually need them. And you'll get a good feel for who that partner is and how they respond to that, because some will say, oh, that's great. Call me when you have something that I can lend on. And then you've got an idea of what that partner would be, right? And if the partner is interested in building the relationship, interested in getting to know you and the services that you provide well before there's any need, I think you've got a real long-term partner there.
I think it's helpful to talk to people in your same situation. Someone else probably knows a hunter, has a relationship that they're more than happy to hook you up with.
Keep going. As I think we've heard in different ways today, a lot of this is education. Jordana also talked about this too, that sometimes there needs to be some education, with the person on the other side of the table, as to why this could be in their best interest, and bringing the banker around to the idea of, why investing in broadband is worthwhile. I don't work on this, so maybe that perspective has changed in recent years, but I think just keep chipping away at it, and thinking about the business case and pitch.
Yeah, I think there's, I know we're probably going very close to long, but I think that there's no shortage of capital that is interested in broadband. I think that the trick is always the return that capital wants. Understanding, again, to the point we made early, understand what the demands are of that capital, and what you're getting into.
Thank you. Perfect way to sum it up. Thank you so much, Hunter, Jennifer, and everybody for your great questions.